Gold has long been seen as the ultimate currency, standing alone in its ability to fulfill all requirements demanded of money since Aristotle's time. From ancient empires to modern nations, gold has held an unparalleled place in history, an emblem of both power and wealth. As geopolitical tensions rise and fall, the price of gold often reflects those changes, a truth that continues to this day. In times of fear or turmoil, faith in government wavers, and the gold price soars. For over 5 decades, gold prices have increased while stock markets plunged in times of economic instability due to its purchasing power staying relatively consistent despite changes in currency values. This makes it an excellent hedge against inflation and a wise investment choice for those looking to protect their wealth. Ray Dalio is a renowned investor. When he was just 12 years old, Ray invested $300 in Northeastern Airlines, which tripled in value shortly after. This early success instilled a passion for investing that led him to college and eventually the founding of Bridgewater Associates. Today, the hedge fund is one of the largest in the world, and Ray wants to share his knowledge with others, and he is advising people to store as much gold as they can. His views on investing in gold and silver make an interesting topic to explore further. Hello 101 community, welcome back to our YouTube channel. And in this video, we will be showing you why Ray Dalio is pushing people to invest in precious metals. But before we begin, if you are new here, make sure to subscribe to our channel and turn on notifications to never miss any updates. Now, let's take a look at why financial experts are investing in gold and silver. Ray Dalio is a student of history and believes that by studying historic patterns, we can learn a lot from them. With the current economic turmoil, investors are increasingly turning to gold as a hedge against market volatility. The value of the US dollar has been in a state of flux since the 2008 financial crisis, but gold has managed to remain a reliable investment. Investing in gold can provide a much-needed buffer against currency fluctuations and other market risks. Additionally, gold has historically held its value over time, making it a great long-term investment. All in all, gold is a wise choice for investors looking to safeguard their wealth during uncertain times. In 1971, the world was still on a gold standard, and paper money had value because it could be exchanged for gold. Unfortunately, the US began to feel the strain of this system as it was spending more than its income and printing out more money than it had gold to back them up. This resulted in a rapid depletion of the US gold reserves as people presented checks to banks for conversion. The situation was becoming unsustainable, and it ultimately led to the breakdown of the gold standard in 1971. It was around this time that currency values began to be based purely on faith rather than a tangible asset like gold. Although this was initially a controversial move, the US eventually managed to tackle inflation and protect itself from foreign nations' demands to redeem dollars for gold. Ray Dalio's analysis of the changing world order provides valuable insight into understanding the global macroeconomic landscape. He believes that looking at past empires and their cycles of rise and fall can help us to better anticipate economic trends so that investors can make more informed decisions. The current world order is in a state of flux as the power dynamics between nations are shifting. We have seen this before, with changes to global systems occurring after World War I and II. For example, after World War II, the United States emerged as a dominant political, military, and economic power, with 80% of the world's money, a large portion of the world economy, and it also set the rules for how global affairs would be governed. Similarly, the Treaty of Versailles determined the new world order after World War I. These changes in power dynamics and rules highlight how the end of a conflict can lead to a new world order for the victorious parties. It is possible that we could see this again as tensions between countries continue to rise. Therefore, it is important to keep an eye on global developments and be aware of the potential for a new world order to emerge. The US dollar is the world's reserve currency and has enabled it to borrow and print money, which has caused asset prices such as stocks and real estate to rise. This has led to an increased wealth gap in the US as concentrated amounts of wealth are distributed amongst a small number of people. Ray Dalio believes that planning ahead is the key to financial success in a time of economic crisis. He argues that if individuals and countries are aware of the average lifespan of an empire, which is typically 150 years, they can make wise investments and minimize the risk of future financial hardship. This is especially important when a country's currency is in danger of becoming too strong, as this can have serious negative implications for its prosperity. As we move into the future, more attention is being given to non-fiat currencies such as gold and digital currencies. These alternative forms of currency are being seen as viable options for those seeking to transact in a different way. With fiat currencies having been the norm for many decades, the next few years will be a period of intense competition between traditional and alternative forms of currency as the world seeks out what is most acceptable. Therefore, it is important to be aware of all the options and understand how they may affect our lives. We should never rely on governments to protect us financially because history has shown that they are likely to abuse their power when it comes to the creation and use of money and credit. This is because, in their situation, most people would take advantage of the privileged positions they are in and do the same. Let's take a short break. We would like to ask you a small favor. If you liked the video so far, press the like button and subscribe to the channel. Also, if you want to develop yourself financially and want to take your future into your own hands, check the links in the video description. You can also support the channel by visiting our merch shop and buy one of our products. The link is also in the description. Let's continue with the video. Printing money is generally considered to be easier than raising interest rates for central banks. When the cost of borrowing is higher, it makes financial decisions more difficult for households and businesses. They may have to cut back on investment, which can slow down growth in an economy. On the flip side, when a central bank prints money and keeps interest rates low, debt is more easily accessible. This encourages businesses to borrow and expand, which often leads to increased employment and other economic benefits. In the short term, it may seem easier for central bankers to print money as a quick fix to low economic growth or rising unemployment. However, in the long run, this increases prices on everything, leading to inflation and speculative bubbles across markets, from stocks to homes and even cryptocurrencies. This is because printing more money lowers the purchasing power of all dollars. We often think of cash as a safe store of value, but this is not true if more money is constantly being printed. It's important to remember that there are consequences for taking the easy way out. As the creation of money increases, it has an adverse effect on cash and debt assets by reducing their returns. This causes investors to look for other inflation hedge assets, such as gold, commodities, inflation-indexed bonds, and even digital currencies. The increased demand for these alternative investments leads to a devaluation of money in the market. This creates a self-reinforcing cycle wherein increasing money supplies reduces its value further. Ultimately, this could lead to higher levels of inflation if left unchecked. It appears central banks around the world have begun to catch on to the instability of the US dollar, as evidenced by their move away from holding dollars and towards holding gold. In 2020, 36,000 tons of gold were purchased by central banks, a staggering 31-year high. This shift in demand has had an impact on the price of gold, with prices continuing to rise as more and more banks move away from dollars and into physical assets such as gold. It seems clear that these major financial institutions are keenly aware of what is happening in the global financial system, and they're taking steps to protect themselves. With this kind of behavior being exhibited at such a large scale, it might be prudent for everyday people to start considering how they can protect themselves from the same instability. But why emphasize on gold when any commodity serves as a store of value? Here's what Dalio has to say on that. There is an old saying that gold is the only financial asset that isn't someone else's liability. Gold is a valuable commodity that has been used as a medium of exchange and store of wealth for centuries. Its advantages include its intrinsic value. It can be melted down and exchanged for almost the same value it had when it was spent, as well as its trustworthiness. Gold is a secure asset in times of conflict and distrust, as it is not dependent on the promises or abilities of any government. In addition to its practical uses, gold is also a symbol of wealth and status, making it a sought-after investment for those looking to diversify their portfolio. For these reasons, gold is an asset that continues to be trusted and valued by people all over the world. Silver has been used as a store of value for thousands of years, but today it is typically valued to a lesser extent than gold. That's because the current price of silver means that 80 ounces of it is equivalent to one 1-ounce gold bar. This makes gold a much more practical option for central banks that need to store large quantities of metal. Silver has long proved to be an effective hedge against inflation. Its intrinsic value, portability, and ease of storage makes it a sensible choice for those who wish to preserve their purchasing power against rising prices. For this reason, many central banks are big buyers of silver as a safe haven asset, although it's more likely to be of significant benefit to everyday individuals who are not dealing with such large sums. Silver has a proven track record of being one. In the more than 300 years since 1700, 750 different currencies have been introduced as mediums of exchange. However, only about 20% of them continue to exist, and all of them have been devalued in some way. Interestingly, gold and silver are the only two entities that have continuously held their value and acted as money since 1700. This is a testament to their intrinsic value and the confidence people have in them as valuable commodities, even centuries later. The US dollar is no exception. In fact, the US dollar has been declining in value since the beginning of 2021, and it's only getting worse. With the Federal Reserve pumping trillions of dollars into the economy and inflation rates rising, it's no wonder that more and more Americans are living paycheck to paycheck. The fear of hyperinflation looms large and is a real risk if the Federal Reserve doesn't take steps to curb the increasing money supply. Dalio noted that history tends to repeat itself. Looking at how major economic downturns have played out in the past, Dalio believes it's likely that things will get worse before they get better. As a result, it may be a good idea to invest in something that won't suffer the same fate as other assets: gold bullion. Gold is the only financial asset that isn't someone else's liability and is valued as a store of wealth. Plus, its value could potentially skyrocket in the event that governments are forced to print an endless amount of currency, meaning the price per ounce could be infinite. Investing in gold bullion now could help you protect your assets and even benefit from the potential upside of a once-in-a-lifetime economic event. Gold has been an ever-present part of our economy for centuries, and its value over time has only continued to rise. Investing in gold coins and bars is a smart way to preserve your purchasing power, protect against counterparty risks, and hedge against the eventual devaluation of currencies like the US dollar, euro, or yen. In fact, if you bought an ounce of gold back in the late 1960s for $38, equivalent to $258 today, it would be worth around $1,776 now. The commitment to own gold has held true throughout history, so why not make sure it's included in your portfolio? With all these benefits of investing in gold coins and bars, there's no better time than now to get started. It may take some research and thoughtful consideration of your portfolio goals, but the potential rewards are worth it. Take a step towards financial security with gold. So, 101 community, we hope that you can use this information for your personal benefit. Don't forget that gold and silver are the only form of money that has seen the fall of empires and the destruction of economies, only to emerge victorious. Stay educated. If you want to see more videos like this, subscribe to our channel and click on the bell icon so you will be notified of every update. Also, check out the links in the video description. Remember, we live in turbulent times. The global economy is upside down, and we have made it our personal goal to deliver financial education to everyone who needs it. Watch our video appearing on the screen about how you can personally benefit in a recession. See you there.